Hello, I'm Robin Gibson, and this is the Harvard House Money Morsel. Welcome back. Thank you for joining us again. Don't forget to like and subscribe and click the bell so you get a notification of when we're releasing a new video. I'm sitting today with Jana Van Rooyen. Hello, Jana. How are you doing?
Fine, thanks, and you, Robin.
So first of all, Jana, congratulations. You've been promoted to the head of research at Harvard House. So well done. It's great to have you, and we're already seeing the benefit of what you're doing with our new team. So congratulations.
Thank you, Robin.
Nice to have you with us today. So, Jana, one of the areas that you're really responsible for is the retailers. And it's very, very linked to the South African consumer. And so we're always concerned about the consumer. Obviously, now we're getting a lot of results after the Christmas trading period. Tell us what's happening with the consumer and the retailers.
So we got a few of our apparel retailers and our pharmaceutical retailers that gave us some insight into what our consumers spent their money on over the Christmas period. Going into this period, we expected still a consumer that was under pressure. We saw that with the debt that they were in. The amount of debt versus their disposable income was still quite high. And with inflation easing, we got our interest rate cuts. So at least they got some reprieve over this festive season. So it felt like there was a lot of people that had pent up demand for big ticket items, like that old fridge, that old bed needed to be replaced. So with the SA retail sales, before we got the trading updates, we saw that in November sales, that household goods had really good sales year on year. Yes. Our pharmaceuticals and clothing and retail still managed to have a positive growth. What lacked was our food retailers, and that numbers did come through with the trading updates. Clothing had mid to low single digit growth, and I think there a Shein and a Temu might have been a bit gave a bit of competition to our retailers because our rand strengthened. So now it looked a bit cheaper to buy our clothes on those platforms. And then Clicks, for example, had good growth. They did have some competition, but beauty looked like had really good growth. So obviously people started splurging a little bit on themselves over the Christmas period. But the food retailers didn't have really good growth, and that was because of deflation. So bad for our retailers, but good for us as consumers. At least we're getting some cheaper goods. Yes. To buy. So that's what we saw during this festive period.
So Jana, last year we really saw the retailers, they underperformed, they come under pressure, and we've got a fair number of retailers in our portfolios. But they underperformed. It was really for a number of reasons. It was Liberation Day and the budget, after the GNU euphoria. So everyone was a little bit more skeptical. It wasn't till towards the end of the year we became a little bit more optimistic from that point of view. But it's not worth getting too negative, because as we look now, we're likely to get more interest rate cuts. And then the big one is the fuel price. So how are you guys looking at that in terms of, from an investment point of view, in the retailers that we're holding in portfolios? How do you look at it in terms of the outlook going forward?
So it looks like the consumer sentiment is picking up. If we look at credit demand over the November period, there was a big pickup. And that's, if you compare that to the inflation, repo actually coming down, there's definitely a bit more demand now for credit. And other analysts say that they do expect that sales of property and vehicles might be the ones worth looking at. But for our retailers, they're still able to have good volume growth. That means that the consumers are still spending on disposable goods. So for us, a company is still growing strong. They still got good earnings. That means we've got still good dividends that they pay out to shareholders. So even though SA Inc. last year wasn't very popular, it just gave us good opportunities to buy good companies at cheap prices.
And that was accelerated by the fact that everyone ran from what we always talk about, everyone running from one side of the boat to the other. So obviously with gold and platinum doing what it did, everyone was sort of running out of the SA Inc. into the mining stocks. And that probably exacerbated the pricing and gave us good opportunities, doesn't it? So, I mean, what were your big choices in terms of stocks that you guys liked from the retailers with the outlook going forward and the good pricing because of circumstances?
Well, one that I can definitely highlight is Clicks. It's always been very expensive. So Clicks had their 52-week low a couple of weeks ago, and we've definitely started piling into that one because we still got good outlook growth. Their store rollout is still stronger than their competition, and even though there was good discounts from their peers, they were able still to grow. So it's one of the ones that we've always had on our watch list, and you're still getting good returns on that one. So
and a great management team, isn't
yes,
it? Yeah,
yes.
yeah, awesome. Well, Jana, thank you for giving us that insight, and just keep doing that great work and keep that team working hard and scratching in the numbers in the background. Thank you for joining us. Don't forget to like and subscribe, and we'll catch you next time. Bye bye.